Hello everyone, welcome back to another video. Today I'm going to be going over yesterday's price action, which was here Monday the 8th of September, and how this was a very tricky day, a very slow day. It was a no news Monday, and how you could have taken a lot of unnecessary losses because of the way price was moving, and how to actually avoid them just by practicing patience. So I also was a victim of taking unnecessary losses yesterday. I had like 4 losses just trading in this little chop over here. And then when the actual proper setup came, I executed again. And then I was able to make back my losses. But first of all, I shouldn't have been taking 4 losses in the first place. Because normally I would have a rule to take like 2 or 3 losses max per day. And if I take 2 or 3, then I would call it a day. But after taking the first couple 2 or 3 losses, I realized that there were very bad trades, and okay, I did overtrade by taking another loss, and then that fifth trade that actually made back my losses. But that's because I realized in the moment that my trades were very bad. You can say that's a risky thing to do because you can go in that spiral of entering that spiral of revenge trading and oversizing or whatever, but I stayed quite calm. I analyzed my losses in the moment and I realized that they were not proper. The context was not there yet, the confirmations were not good enough. And when I waited for the actual good location, context, and confirmation, that's when I executed, and then I took a nice trade. So let me show it to you which trades I took and why I took them in the first place. So on the S&P, this was my pre-market plan, which I always share every day on X. So my plan was to look for buys if pre-market highs are still intact, to look for a sweep below the pre-market lows, which was the 95s, to then look for buys targeting pre-market highs, or if price drops further, but that did not end up happening. So let's look at the sells. If we sweep pre-market highs and stay below the 6525, so if we sweep the highs and we stay below here the 25s, then I would be willing to look for sells because there was a massive sell-off on Friday and I wanted to see if we could continue that sell-off because the pre-market was pretty flat. So that's what ended up happening, but the difference is the market was just hanging around here for like the first hour of the market open. So let's dive deeper into why I traded and why they were actually not good enough. So if you go to the lower time frame, let's go to the 1 minute just to show you over here. This is how the 1 minute looked for the first from 3:30 until let's say 4:30. The chart was basically just ranging in this more or less 10-point range. Yeah, basically 10 points. And for me, if you have an edge for this, fine, go ahead and execute it. But for me, this is not what I want to be trading in. I want a little bit more speed. I want volatile movements to be able to catch decent moves. I can't really trade this. This is too tricky for me. And it's usually something I don't want to be involved in. So I was waiting patiently and I didn't have any trades yet until here, I think, is where I took my first trade. So let me show you the trades I actually took. And so there you go. I waited for price to break out of this range, sweep the highs, for then aggressive selling to come in, and then I wanted to look for sells to target these lows again. But we were still just not volatile enough for sellers to step in. So I took a loss here, I took another loss here, took another loss here, took another loss here. But what was the difference with all these trades? Look how slow price is moving here. This is not something you want to be trading. And also the confirmations were not proper. So let me show to you right now what I actually should have done. And this had to do with this line over here around the 14s, 15s. And what's important about this? So let's remove this range for now. You saw the sell-off of Friday. Friday sell-off happened. And this left a low volume node area right over here. For me, what I look for in low volume areas is always some type of structure for price, opposite structure for price to resist that. So where was that for me? It was this low over here, this low over here. So this like kind of previous support line is where I expect price to start resisting at. So that's when I drew that line in during the market open. But by that time I already took a loss before that moment, even before price even touched that level. So before price even touched that level, I already had taken a loss, which was not a proper loss. I should have waited for price to hit that opposite structure to then actually have a decent maybe resistance of price, because this was just in the middle of nothing. Then I took 2 more losses over here because price was just way too slow where I shouldn't have been trading in it. Let me show you how you can also assess if price is moving too slow for you to trade for. If you use the footprint, you can easily see this, so let me show it to you. Alright, so now we're on the footprint chart. As you can see here, this is market open right over here. And this is a 20 tick range, so 5 points for every bar that opens on the footprint chart. And you can just see this whole range is something you don't want to be trading in. This is just way too choppy. For me and for my edge, what I need is a lot of new footprint bars opening every other minute, just a lot of volatile movement, a lot of volume coming into the market. And this was not the case yesterday. So we ended up breaking out of this range to the upside. And for me, the best confirmation is to first get a reaction out of the market where I want to see the market go to. And that's not what I was doing when I was taking these trades. I was just trying to catch the top of the market, which is just totally wrong. I shouldn't have been doing that. I should have just waited for a drop first. It can happen here, a drop first, and then a retrace, seeing trap buying again. That's what my mistake was every single trade that I took here. So this one was too early because it hadn't hit the structure around the 6.515s yet. Then right over here, I was just trying to catch the top of the market without seeing that sellers were actually factored in the market. We hadn't seen a sell-off yet. Buyers were just slowly grinding up, slowly grinding up. And this is not what you want to do if you want to sell against that slow grind up. You first want to see a reaction of sellers actually being there in the market, and then wait for a retrace up to then go for a continuation sell-off. So let me show you the first trade that I took right over here. The confirmation was good, but the context and the location was not good in this trade. So let me show you the confirmation. As you can see here on the bookmap, we have a lot of buying coming in, a big offer getting filled here, a lot more buying stepping in, but not really getting rewarded, and price is not really moving up. Then aggressive selling steps in. And as soon as we get this little retrace up, which is a little bit slow in my opinion, I'd rather see a quick pop up and see that fail. But nonetheless, I took this trade here at the 07s. As you can see here, I entered at the 07. The confirmation was decent because here is how it looks on the footprint right over here. So you see all this buying getting trapped, right? You see 860, 240, like all this aggressive buying is right here, and it made a P shape as well with an aggressive selling stepping in here, minus 1,300 lots. So the confirmation was decent, but the location and the context for the trade was not good enough. And then the next trade I took right over here at 11:50 was my entry, and that's just right before 5 o'clock my time, 5 p.m. So this is the confirmation how it looks on the bookmap. So we went to high day was around 13s here, and the buying is starting to dwindle, right? But you see all this aggressive selling stepping in, but there's not really a sell-off happening. What does that mean? That means that there's a passive buyer here absorbing all that aggressive selling. And you can see that as well, like I'm starting to see some sellers step in, but not even any small little M1 low is getting taken out. Not even break of structure on the M1 is happening. So that means the uptrend is still going on, and it's just slowly grinding up, taking as much liquidity as these buyers can. And let me show you the speed of the tape actually in real time. This is how slow price is moving while I was looking for a sell, which is something I don't want to be looking for. In the moment, I didn't think about it, but now thinking about it is just completely ridiculous for me to look for sells when I'm not really the biggest fan of sells already, personally. And if I look for sells, I want it to go quickly. I want to go for a quick scalp. I don't want to go for big moves for sells. And also a thing, when you see this at a high of day and price is slowly moving up, and you see all these red bubbles, aggressive selling, trying to move the market down, but they're not able to, that just means there's a passive buyer absorbing all this selling, and there's a very big chance that price is going to move even higher and take out the high of the day. So this is where I'm entering a trade. I've seen this smaller buying and this aggressive selling stepping in, completely ignoring the fact that what I just said, like a passive buyer is probably absorbing all the selling. At this point, I entered here at 1150 because I saw the selling coming in with a 2-point stop right above the high day. But this is just not a great confirm. The context and the location is starting to get better. It's not ideal yet. As I said, the best location was around the 15s because of that opposite structure of Friday at the top of that low volume area. So what's now with this trade is the confirmation is not there, the location is not there, and the context is not there. So this is just a completely shitty trade, which I shouldn't have been taking. So that's the second trade and the second loss of the day, which is just my mistake again. And as you can see here as well, this is the footprint bar that represents the area that I was trading in. It's just no confirmation at all. No proper confirmation at all, even on the footprint chart. And that's what I saw as well on the Bookmap, what I just showed you. So this trade was probably the worst trade out of all of the trades that I took. So let me show you right now the third loss that I took. So the third trade that I took was right over here, and I took it at 12.50. Right now, what happened is we hit that opposing structure from Friday. There's a little bit of selling coming in, but me not being patient enough to get a good entry, to get a good risk to reward, to leave my stop loss a little bit above higher day to give it some space, because sellers have not been factored in the market yet. We haven't seen a lot of selling coming in, and I'm trying to catch the top of the market, but then I'm being impatient with my entry because I've already taken 2 unnecessary and quite honestly stupid losses. So I enter right here. This is how the footprint looks at the moment. It's inside of this bar. And again, yes, you see some trapped buyers at the highs, but not really a P shape. It's just a little bit of mixed signals, and we haven't seen selling coming strongly yet. And then I get impatient with my entry as well. So I enter here at 12.50 with a 3-point stop loss right here. My stop loss is just not placed well at all. My stop loss should have been here, especially with how slow the market was moving, especially with selling not being involved in the market yet. So I definitely should have waited for a better entry to be able to place my stop loss at least a couple ticks or points or 2 points above the high to still be able to have a good risk to reward for my targets. So this is how the Bookmap looked on that trade. Just a lot of aggressive buying again, taking out high day, a lot of offers filling, and just some selling stepping in. Not really anything significant, not really breaking any lows, not really doing anything, just same story like it happened before every single time. Break a high day, selling stepping in, then break a high day again, selling stepping in. It's just a normal uptrend. All these passive buyers absorbing that aggressive selling to go higher eventually. But then again, me just being impatient, trying to make back those losses, those stupid losses that I took earlier with a trade right here at the 12.50s. Let me just show you how slow the market was moving. Everything is just not being volatile at all. This is conditions where I should just wait it out, let sellers step in, let sellers break some lows, let them show them their strength in the market, and then wait for them to get a pop-up. Wait for a good place to enter your trade where you can place your stop loss at a proper area as well to have still a decent risk to reward for your targets. But I wasn't doing that. Let me just speed it up a little bit. I got impatient. This is how the market should look in real time, but now it's 8 times sped up. So yeah, just very slow conditions. This is where I entered the trade at 12.50 after seeing that failed pop up, but it's just still very risky because I'm entering at 12.50. And I don't want to use a 4 or 5 point stop loss because then my risk reward is almost nothing because I had a target close by because I didn't want to go for a big sell-off. So what did I do? I placed my 3-point stop loss just below high day. But in this market where we see high day constantly getting taken out because these passive buyers are moving the market up, that's just not a smart idea to place your stop loss even below high day. So that was the mistake with my third trade, and also no confirmation on the footprint. Then my fourth trade of the day is right over here at 11.50 with a 2-point stop right above this little high at 13.50, which is still not a good entry. Not a good stop loss, being impatient again. But what was good is we were at the right location. The context was getting a little bit better. Sellers were stepping into the market already. We broke some lows. So now it should be valid to start looking for sells. But now we just need the right confirmation. On this sell-off, this is what it looks like. On this sell-off, just a little bit of mixed signals on the footprint. But as you can see on the bookmap, there's a lot of aggressive selling. Where do you want to be looking for a short? Well, you want to see certain areas defend price, right? So you want to see this defend price or a little bit higher. You want to see these buyers not be able to push price higher, and you want these sellers to defend this area. Also this area, you want sellers to defend that because that's where sell-off happened. When price is moving back up in there, you just have to wait for a good confirmation. But me just being impatient because of these stupid losses, I start getting impatient. I try to control my emotions, but I was quite honestly feeling a little bit of wanting to be right too much in the market. I wanted that sell-off to happen too much because I had taken those losses. So I enter right here at 1725. Yeah, that's right about now at 1150. So I entered right over here after seeing that pop with weaker buying and aggressive selling step in. I took a short right over here with a stop literally right here, where that's basically just a very bad placement for a stop loss. What else? If I'm entering the market right here and I've seen high of day taken out so many times already today, I should wait for a higher retrace with weaker buying or trad buying to then be able to place my stop loss above the high day. That I didn't do it again, just because I was so focused on getting that sell-off and I didn't want to miss it either. So what's happening now? A sell-off came, filled some bids, and we're moving up again towards high day. So that means all these sellers were getting absorbed again, and just price moved up with these again to the high day. And I believe it took it out. Oh no. So it didn't take it out, just made equal highs. Got filled again, an offer got filled here as well. So obviously I got stopped out here out of my fourth trade already. So that was 4 losses for the day already. And then I saw something interesting. So we made these triple top here. We started making a P shape here on the footprint with a lot of buying here getting absorbed. That's what this is. All these buyers getting absorbed and all these offers filling. And right here, where did the offer go now? So right here, an offer fills at the higher day and immediately re-offers. That for me was very interesting in the moment, and I decided to take one more stab at it, which is not good behavior. I don't advise you to do this at all, but if you would have just avoided all of these unnecessary losses, then it's still a valid trade to take. So I took a short here at the 15s, which is right now here, after seeing all this buying getting absorbed, filling this offer, and then re-offering here again. This is what I saw to take another trade, and then that trade finally worked out. It's not good that I did it. I'm being very honest here. I shouldn't have done it, but in the end of the day, I still did it and made back all my losses. So it is what it is. It's not good trading discipline. I'm being very honest in that, but I did it and it worked out. My stop loss was right here at the 17s. So we started to see a sell-off a little bit come in, and that's pretty much it. I had my first target here where I took one contract off as a partial because that's where we were supporting the whole time. And then my next target was here at this low, and that trade gave me like a 3.8 R, I think, more or less, with the partial. The full thing was a 4.5 R move, but because of the partial I took a little bit less. So I think it was like 3.7 or 3.8 R in this trade. So I pretty much made back all my losses, but it's not good trading behavior. These confirms were not good enough, or this maybe was good enough, but just the location for the confirm was not good enough. And that's pretty much it. Then price sold off aggressively, and there you go. That's where my target hit here at the 06s. And this P shape was formed very nicely at the highs, triple top. So this was the first trade that was actually clean yesterday. So yeah. So the key takeaway of this video and of this trading day is, if you see that price is moving very slow or price is not at an area where you are interested in of trading, just stay patient, don't force anything. If you see buyers are just constantly moving the price up slowly, wait for sellers to come in first. Let them show their strength and then play on a retrace. But make sure your entry is still at an area where you can have your stop loss at a safe place, where it still makes sense for you to enter that trade for your risk to reward. And then you should be good. But just staying patient is the overall takeaway. And don't overtrade like I did yesterday either. I'm not very happy with what I did yesterday. Okay, it worked out, but maybe another day is where the fifth trade I take is going to be a loss, and then I have 5 losses for the day, and maybe after that, who knows what would happen. So this is definitely something not to do. I would recommend for you to just stick to 2, maximum 3 losses a day, but I prefer to be 2, so you don't enter in this spiral of over trading. But for me, I just realized in the moment why these trades weren't good, but that's not an excuse. I still shouldn't have taken this trade, but yeah, it worked out anyway. It's not good, but it is what it is, and I would just not do it again in the future. So thanks for watching. I hope you got any value out of this video. If you did, leave a like, and if you have any questions or want me to go any deeper into certain topics that I went over in this video, let me know in the comments, and I'll be sure to make a video about that if you have any suggestions or questions. So yeah, peace.